Andy, it's great to have you on the show.
Steve, pleasure's mine. Thanks for having me.
Yeah, well, you and I really just got to know each other here very recently. We were both on the same panel at the Bitcoin for Advisors conference with CoinDesk, and that was a great event, and it was great to meet you there. And so here we are recording a podcast. So I appreciate you taking some time here today.
Yeah, it was a fun panel. It's the second year I've done this, and the mission is to help financial advisors understand Bitcoin and where it might fit in the portfolio. And I appreciate you bringing the big picture lens to this whole discussion, because many of us in the Bitcoin space have sort of been shouting into the void about Bitcoin. But I think we're finally getting some traction and engagement from advisors, and that's in thanks part to work of people like you.
Yeah, well, we're definitely getting some traction in the advisor community, and I think a lot of them are beginning to realize that Bitcoin is not going away, DeFi is not going away, and that there really is a remaking of the financial system that's taking place in front of our very eyes. And so I think advisors are beginning to realize that. And thanks to people like you and your firm, and I know you're also affiliated with Swan Bitcoin, and we'll be talking about that here in just a little bit. But let's start with your journey. So tell me a little bit about who is Andy Edstrom? How did you get involved in the financial industry? And then how did you get involved in Bitcoin in particular?
Yeah, sure. So I'll give the short version here. I grew up in LA. I went to college in Massachusetts, and I was one of those guys who had read a little bit about finance. I did have some in the family. So my father is a career financial advisor himself. And so he taught me a few things, and I got interested in the space. Then, of course, I read about Wall Street. I think I read probably Liar's Poker or something else by Michael Lewis or other authors. And I decided, okay, well, I'm going to start on Wall Street. So coming out of school, I worked for Goldman Sachs for a couple of years. And then I worked for a private equity fund that spun out of the Carlyle Group. And then I moved to a hedge fund here in LA, about a $5 billion fund. And then in 2012, I got interested in joining the family business. So it was sort of a long and circuitous route of me really learning how to be a buy-side investor over a period of years, and then bringing that skill set back to the family business. So that's how I got into the financial advice and wealth management business. Now, with respect to Bitcoin, I saw what other people see, or what most people see, which is they get engaged when they really start seeing the price move. Now, however, I was one of those three exposure guys. So in 2013, I was on vacation actually in Eastern Europe, and I was listening to The Economist on audio, on pod version, and I heard an article about Bitcoin, and it totally went over my head. I thought, oh, that's weird, and I didn't get it at all. Fast forward a few years to 2016, I read an article, I think it was in the Wall Street Journal, about the DAO hard fork with Ethereum. And once again, I didn't understand it at all. And it was finally in either first or second quarter of 2017 that one of my smart friends, a guy by the name of Arun Rao, sent me some information and connected me with some folks in the space. And that's when I saw the price moving, and I fell down the rabbit hole, and I really started doing my research on crypto overall, or let's say digital assets. And then it took me, probably another good year plus to really solidify my conviction that Bitcoin really was the most important thing going on in the broader digital asset space. So that's a little bit on my career, as well as how I came to Bitcoin.
And then as you started to research Bitcoin, what were the resources that you turned to at the time? And was there anything in particular that was just like an aha moment, or what, maybe there was a book or something that you read that was like extremely persuasive, and that light bulb went off and it was like, now I get it. Was there any moment like that?
Yeah, I think there's at least one moment that sticks out in my head. And this was before I really gained my conviction specifically on Bitcoin. But I was probably 10 or 12 hours into my research on digital assets in general. And it was all, reading news articles and things relatively high level. And I got to a point where I just sat back in my chair and said, just tell me how the damn thing works, right? Like, what's so interesting here? Why is this system so secure? And I finally ran into an article on TechCrunch, which explained what a cryptographic hash function is, what ECDSA is, that's the signature algorithm, how a block of transactions is constructed and appended to the blockchain, and why it is really easy to verify and check the veracity of those transactions that are added to the ledger, and insanely hard, right, to fake it. And so that was an aha moment for me of, oh, I kind of get the basics of how this thing is really secure. And then the other effort for me that that helped me build conviction in Bitcoin was the moment let's say about a year and a few months after the moment that I just described, reading that TechCrunch article. This was after the latest, let's call it bubble, had deflated in the digital asset space. I really was focused more on Bitcoin. And as part of it was an exercise in building conviction for me to put it onto paper. And what I initially decided to do was, hey, I really want my clients into Bitcoin because I really think this is the hard money asset. So if I'm going to get them into it, they're going to ask me a lot of hard questions, not least of which is, Andy, why the heck are we buying this asset that just went down 85% in price in short order? So I knew I'd have to write it down. I knew I'd have to basically put the whole thesis on paper. And I decided that if I was going to do that, well, I might as well do it for everybody. And so that was the genesis of my book, Why Buy Bitcoin. And that process of writing for me was not only a reflection of my conviction in Bitcoin, but it really helped me fill in the gaps in my knowledge, really button up the thesis in terms of, okay, how can I be wrong? What are the risks really? Has Bitcoin already truly won in the category of hard money assets, versus all the other assets out there?
Yeah, and I did get your book. I read your book, and one of the things that I like about it is that you come at it from someone who is well trained in the financial area. So you're a CFA and a CFP, so you really understand the numbers. And I suspect you may have come at this with maybe a skeptical eye to begin with, because it seems like most people that have a CFA background are very technical, they're very numbers oriented, and they're very traditional. And so I always think it's great when someone like you that has that kind of background, that you're open and receptive to something that is totally different than what you probably got trained in as you were going through your CFA coursework.
Yeah, no, I appreciate that, Steve. And I wish that I were one of these genius software guys that saw the white paper, read it in 20 minutes and said, oh, yes, obviously this is the thing, right? I don't have a software background. So I was, I think, actually hampered like many, let's say, legacy finance people are, especially financial advisors, but not just financial advisors, bankers, et cetera. I was hampered by having been trained in Keynesian economics and focused on monetary policy as it exists in the world, and never ever questioning that anything else could be, let's say, possible. Any other system could sprout up out of the ether, as it were. And so, yeah, I was a skeptic just like everybody. I mean, the first time I saw Bitcoin, I thought it was silly. I mean, I wish I'd been brilliant enough to engage with it immediately, but I'm no smarter than anyone out there in that regard. I guess for some reason, I was willing to give it the time of day to delve into it and do the research. And, in defense of a lot of financial advisors out there, it does take a lot of research and time and understanding. It's not a really accessible topic because, as you know, it touches on so many different disciplines and areas, whether it's political science or game theory or, distributed systems and cryptography and math, and frankly, psychology and sociology, and of course, monetary history. There's just so much there that it is harder to digest than many topics. Fortunately, there are those among us who have banged our heads against the wall and tried to distill it, a little bit better than some of the resources available in the past. And I'm just happy to have done my small part in that.
And what you described there is exactly why I love Bitcoin so much is all the things that it touches. You mentioned the game theory, the sociology, psychology, monetary policy, history, distributed systems, so on and so forth. It's like, I like to think of it as, people always talk about a funnel. And if you think about the top of the funnel, and I think about, okay, how do people get interested in this? And to me, if you're looking down at the funnel, like here's the circle around the top of the funnel, there's so many different points along that circle in the top of the funnel that if you just get interested in, decentralization, okay, well, that's an entry point into Bitcoin. Or if you're interested in, modern monetary theory, and it's like, well, where's that going to lead us? Well, maybe we need to be thinking about hard money. Well, that's another entry point into Bitcoin. So there's all these different areas at the top of the funnel that you can get into. But like you say, until you do a lot of the research and you start connecting these different dots and just seeing the genius behind how all of these things had to come together at a particular point in time with what was happening with the world economy and what was happening with, a populist movement and some of the political things going on, that to me, it's like, it couldn't have come at any other time in history. And with where technology was, for all of this just to come together and to get the momentum and the network effects, it's quite remarkable when you think about it. At least that's how I think about it.
I agree with you completely, Steve. And one of the benefits of everything you described is, yes, it takes some work to get up the curve, so to speak, but it's so fascinating. I mean, I have never encountered anything as fascinating as Bitcoin in my life. And so, yes, the learning curve was somewhat a deterrent for me at the beginning. But once I got engaged, once I started digging into it, I just found it to be absolutely fascinating because it touches so many areas, because it is reflective of this unique time in history. And it really is the tool, I think, that the world needs, given all the backdrop that you just described. So I think it's really rewarding. I do encourage advisors and everybody out there to give it a chance, dip your toe, start learning a little. You may find that the topic is really very engaging and interesting.
All right, so let's dig into some of the details here. So we've been talking about Bitcoin. So I'm going to ask you to define Bitcoin in one sentence. And then once you do that, then I'll give you a paragraph to describe. But if someone says, what is Bitcoin, Andy? What is it in one sentence?
I guess if I'm limited to one sentence, I say something along the lines of, Bitcoin is the world's most secure ledger, and that makes it the world's potentially best money.
Okay. All right. And then, so you end up writing this book called Why Buy Bitcoin. And I want to talk about a few of the different things in here. And so let's talk about Bitcoin as money. But let's start with, what is money? And this is a whole nother rabbit hole in terms of what is money. And before you answer that, let me ask you this. Do you come at money from an Austrian school of economics or a Keynesian school, or maybe some mishmash of the two? Or where are you coming from as you're defining your definition of money?
Yeah, that's a great question, Steve. So I was, as I think I mentioned, trained in the Keynesian school, as most Americans are. It took exposure to Bitcoin for me to catch up on the Austrian side. But the answer is, I now come from the Austrian perspective. Carl Menger specifically, I think it was Menger. It was either Menger or Mises, but I think it was Menger, who actually laid out over a century ago a basic framework for describing money as a good in the economy. And I think it's really important to understand money as a good in the economy, like any other good in the economy, except unique, of course, along a few parameters.
Yeah. And so I think a traditional definition of money is that it has three main characteristics. It's a unit of account, it's a store of value, and it's a medium of exchange. Now, I know in your book, you actually talk about 14 characteristics of good money. And I can go through the list here if you don't have it handy, if you don't have it off the top of your head. But tell me a little bit about the traditional 3 characteristics versus the 14 that you talk about in your book.
Yeah. So this is crucial in my view. So let's take those 3 categories that you mentioned: medium of exchange, store of value, unit of account. So my first conclusion after having banged my head against this for a while is that I actually think one of those 3 is primary, and that is medium of exchange across space and time. So I think that the medium of exchange is the crucial function with money. And when we say medium of exchange across space, I think most people understand that. Medium of exchange across time is really the same thing as saying store of value. So to me, store of value is sort of derivative of medium of exchange across space-time. Okay. And then unit of account is further derivative. Going back to what Menger said, what the Austrians said, if there exists a good in the economy that is exchanged for most other goods, well, then it's sort of obvious that that is the good that will become the unit of account. I mean, we could use strawberries or paper clips or automobiles as our unit of account, but it doesn't make any sense. Of course, we're going to count in the thing that we're exchanging for every other good and service that's half of every other transaction in the economy. So that's the first framing. Now, so the question is, well, what makes something a good medium of exchange across space-time? That's where we get into the 14 characteristics of good money. And, I'll see if we can get them from memory. Identifiable, durable, divisible, dense, transferable, fungible, short-term stable, and long-term stable in terms of value. I differentiate those. We could talk about that if that's of interest. Private, required for some important purpose, backed by some power, uncensorable or censorship resistant, and unseizable or Caesar resistant. And I don't know if I missed any, but those are the ones off the top of my head. Scarce, of course.
Yes, we can't forget scarce.
The most important one. So important that it almost goes without
you just
saying.
assumed we all knew that.
Yep, there you go. So that's the framework. And really, what I do in the book is I score different kinds of money. So I score the dollar, I score gold, I score Bitcoin along those 14 characteristics. And what I find, of course, is that Bitcoin is already scoring strongly. It's already outscoring gold, especially in some of those crucial characteristics like scarcity. And moreover, it is improving with time as better applications and software layers and wallets and ways of interacting with the blockchain get built on top of it. Whereas something like gold is basically stagnant. It hasn't changed in a very long time. That's one of its strengths, admittedly, but Bitcoin is basically already outperforming it and continues to outperform.
Okay, so I want to talk about this idea here in just a little more detail. So the US dollar, gold, and Bitcoin scored against these 14 characteristics here. So a lot of people talk about Bitcoin. They will compare it as a digital gold, and makes a lot of sense. And we see these numbers thrown around that the total value of all the gold that's out there is about $10 trillion. And as we're having our conversation here today, Bitcoin's value is about 1 trillion. So it's 1/10 of gold. So if Bitcoin replaces gold, then we're looking at a 10x from here. So tell me a little bit about how you think about this gold narrative, this digital gold idea. And do you see Bitcoin continuing to take, I'll call it, market share away from gold?
Yes, absolutely. I do, Steve. And taking share from gold is the most obvious case for accrual of value to Bitcoin. There's several other ways that, let's say, a Bitcoin investment can win, right? You've got sort of multiple call options embedded in this investment, but taking share from gold is far and away the clearest. There's a few characteristics where Bitcoin performs better or outscores gold. It's actually more dense, right? Yes, you can cram a lot of value into a bar of gold, but with a single code, you can move billions of dollars in Bitcoin. That's one ability it has, where it outscores gold. Scarcity is the big one. And by the way, in the book, this is sort of arbitrary. I weight all these characteristics evenly. That's probably wrong. I think it's quite difficult to put an actual percentage weight on each of these characteristics. So different analysts can reasonably disagree on which characteristics are more important or less. But the scarcity one obviously is extremely important. And as Bitcoin evolves through time, and as the supply schedule, the new quantity of units, falls by half inexorably every 4 years, Bitcoin is actually currently at this inflection point where there's a little under 2% of supply, right, coming on each year for Bitcoin. And that's about the same as gold. And with the next halving, Bitcoin will be significantly more scarce than gold, and that will continue through time.
And the thing with gold, though, is that if all of a sudden the price of gold doubled overnight, well, guess what's going to happen? All the miners are going to go out there and they're going to try and mine more gold. So all of a sudden, instead of gold increasing its supply by 2% per year, now it's going to probably go up significantly. Although there certainly are a lot of constraints to rapidly increase the amount of gold that you mine. So there's definitely a bit of a governor on that as well. But and that again is one of the interesting things about Bitcoin, is that compared to gold, if the price of gold goes up, the incentive for the gold miners is to mine more gold because we're going to make more money, and then it makes the price go down. But with Bitcoin, with that decreasing schedule there, the halving every 4 years, again, that was one of kind of the game theory ideas, I guess, that Satoshi put in there, that it decreases the supply to the point where there's essentially no new supply coming on once we get infinitesimally close to that 21 million, and we keep having a smaller and smaller amount every 4 years. So I guess it never stops, right?
That's right, Steve. And I'm glad you highlighted that elasticity of supply issue. It's so important. The elasticity of supply of Bitcoin really is zero. Now, one of the, let's say, arguments against Bitcoin, the skeptical view is, well, okay, that's fine, but you can make another Bitcoin. And this, I think, is where you really get into the weeds on understanding why Bitcoin is unique. And to me, the reason that Bitcoin is unique and the reason that Bitcoin has a credibly fixed supply is not just the code. It really is the social consensus, and something you mentioned earlier, which is the history of development of this asset. There was essentially what we call a civil war within Bitcoin in 2017, where there was a faction which actually represented the majority, arguably, of the power, let's say, in the Bitcoin industry. All the companies, all the corporates, the major mining entities. And they decided, they had a closed door room. They decided, hey, we're going to change the block size. We're going to change one of the major parameters in Bitcoin. And the rest of the Bitcoin community, and actually it was a subset of the Bitcoin community, said, no, you're not going to do that. If you do that, we're out. We are not going to change our nodes that verify our transactions, that really define what Bitcoin is in the context of the network. We're not going to bend to your will. And that event, which is called the block size wars of 2017, and it had been building for years, really was a seminal occurrence in the history of Bitcoin. It really proved that the network is sufficiently decentralized that even a powerful grouping of entities that's important to the network overall cannot force its will on the rest. What does that mean? It means that the monetary policy really is not going to change. So that is really crucial to understanding the investment thesis for Bitcoin specifically, is that the monetary supply really is limited, and we know that from actual events that occurred in its history.
And I think one of the other things that's important here that would likely preclude any other fork of Bitcoin getting any traction. Well, we know there's already a whole bunch of forks of Bitcoin that haven't really gotten any traction. But the other is just the origin story of Bitcoin, with Satoshi releasing this and then after a couple years disappearing. So it's like we've got this immaculate conception and then they're gone. And what people will say is that Satoshi maybe has access to 1 million Bitcoin, which is worth many, many billions of dollars, and they haven't moved. So it's probably unlikely that those are going to move. But do you view that as a risk? What probability would you put on that in terms of Satoshi reappearing, or maybe some of those coins that we're attributing to Satoshi if those start to move?
Yeah, it is a risk, Steve. And in fact, I listed it in the risk section of my book, of which there's roughly 40 pages, right? I like to call it 40 pages of FUD. That's fear, uncertainty, and doubt. But it is, let's say, a risk. Let's say it's a short-term risk to the price of Bitcoin. So yes, if those very early coins, those coins that were mined either by Satoshi or, a handful of players that were earlier in the space that have not yet moved, if those were to move, what does that mean? It means that some people thought that supply was gone and off the market. So it's a signal that, oh, actually that supply still exists. And so if supply goes up, well, all else equal, perhaps price will go down in the short term. Now, I don't consider it to be a significant risk to Bitcoin's long-term success. Number one, because although that sounds like a big number, let's say up to 1 million coins, first of all, it may not be that high, number one. And number two, that's still less than 5% of the total Bitcoin supply. And 5% is a significant number, but it's actually far lower in terms of percentage compared to a lot of the other, let's say, digital asset or crypto projects out there, which had, founders rewards or pre-mines, as they're sometimes called, of 10, 20, 30, 40% of the total supply. So yeah, look, if Satoshi had mined a third of the coins, I'd really be worried about it. The fact that Satoshi mined perhaps 5% of the coins makes me a lot less worried about it.
Okay. So getting back to these 14 characteristics, one of them was backed by a powerful agent. So we know the US dollar is backed by the US government and the military that supports the US government. Tell me, how do you think about Bitcoin? Is it backed by, quote, a powerful agent? And then also gold. How do you think of gold? What is it, quote, backed by in this context?
Yeah, that's a great question. And I'll preface by saying, I don't think that any of these characteristics of the 14 is all or nothing, right? It's a scale. Let's say it's a spectrum. So, you can score 1 to 5, let's say, on each characteristic. That's one. And then number two, you don't have to have every one of these characteristics necessarily to be powerful in the long run or to succeed in the long run. So I'm not saying that for a money to exceed or to succeed, it must be backed by some powerful agent. I'm saying it helps, right?
Right.
It's better to have it than not have it. So yeah, I mean, the dollar is backed by the military. What is Bitcoin backed by? There's no military force backing Bitcoin yet. I would argue that as the game theory plays out, and as we see not only individuals and then investment funds and then companies and then governments, by the way, we've seen all of these so far, El Salvador being a government, that's the latest major development. I would argue that the more people that have stakes in this thing, the more powerful entities there are. Now, El Salvador actually is a government. I'm not going to say it's a particularly powerful one in the global scheme, but it is a government. And to the extent that governments do adopt Bitcoin more explicitly, they're going to use what power is available to them to support it. The other framing I would say is the Bitcoin mining industry and other areas of the Bitcoin industry are powerful economic drivers. And so what you find is that in countries where Bitcoin has a stronger foothold, maybe there's a larger percentage of the mining industry than average in a particular country, money talks. And so, governments tend to take care of the interests that generate economic value, either because of lobbying or just, outright transfers, bribery, you might call it. And so, yeah, as the industry and the asset grows, you mentioned it's $1 trillion asset today. As it goes to 10 trillion or more, which I do think is rather likely, it's going to infiltrate more parts of the economy and by extension, government. Now, to the question of gold, gold's a really interesting case. Some would argue that the gold market has largely been captured by governments. I mean, the reality is that a large portion of the global stock or supply of gold does sit in government vaults, whether it's Fort Knox in the US or London, et cetera, et cetera. China owns a bunch, Russia owns a bunch. So I would say that the gold market is in some ways backed by powerful agents, in the sense that anyone with a military who's got a bunch of gold in their vault probably doesn't want the value of that gold to go to zero. I would also argue, though, that they have somewhat captured, the governments have somewhat captured that gold supply, in part so that they can do what they want with respect to printing money, and so that they can run fiat currency systems, which has worked for them somewhat for the last 5 decades, but I think is an era that is likely to draw to a close in the next couple decades.
One of the things that you mentioned that I want to dig a little deeper on is you mentioned the miners and the economic power that they have. And I think a great example of that here that we saw earlier this year is when China, for the umpteenth time, decided to basically try and ban Bitcoin. This time they basically said, we've got to kick all the miners out of here. And one of the pieces of FUD that's been out there for so long is like, how much of the hash power is concentrated in China? And I think the best estimates were maybe 50% or so, let's just call it 50%, was taking place in China. And so now if they're going to kick all those out, what's going to happen? Well, we saw the hash rate drop dramatically as these miners moved out. But then within a really short period of time, those miners relocated and the hash rate is on its way back up again. And I think as we're talking today, it's getting close to its all-time high. And so I think about, in terms of backed by a powerful agent, I think about the miners, all the companies that have been built around Bitcoin, and just the whole crypto digital asset system itself is such a huge economic force that at this point in time, if a government tried to shut it down, like China is trying to shut it down, but it's like, I don't know what that kid's game is where, you have a hammer.
Whack-a-mole.
Whack-a-mole. Yeah, it's like whack-a-mole. It's like you hit this one and then it pops up over here. It's like you just can't kill it at this point because it's so decentralized and permissionless that it's going to pop up and it's going to go where it finds a friendly jurisdiction. And I think a lot of that hash power has come here to the US in particular. Some of it's gone to Texas. I think some of it's probably going to Wyoming and up in Canada and North America. So I find that to be very, very fascinating. Again, another one of those reasons why this is such an interesting thing, because it's kind of like that old Timex watch commercial. It takes a licking, but keeps on ticking.
Classic. Yeah, I agree with you completely, Steve. And so first of all, that is one of the essences of Bitcoin, which is insanely hard to kill, basically impossible to kill for numerous reasons. That's one. Two, I want to underscore what you said about China and sort of invert it in terms of the investment thesis, which is, you're absolutely right. Having the majority of the hash power in China was a problem for Bitcoin as an investment. One way you could look at it was, with Bitcoin at roughly $1 trillion market capitalization, which was the case earlier this year, at the recent peak. At that level of value, you say, well, what's my upside? Do I believe it can get to 10 trillion in value? Okay. Do I believe it can get to 10 trillion of value with the majority of the hash power sitting in one particular country, which happens to be China? And the answer is maybe not. So for the investment thesis on Bitcoin to fully play out and for Bitcoin to reach its potential, I think you had to have this event take place. Now, it didn't necessarily have to happen as dramatically and as quickly as it did. It could have happened over time, but okay, the Chinese government did us Bitcoin investors a favor. It said it's happening now, and by the power of the Chinese government, we're going to increase the decentralization of the network, and it happened. So that's one thing. And then with respect to what you said about governments banning or trying to kill it, this I really think is one of the major stumbling blocks for investors and probably specifically financial advisors, which is we have this notion in our heads that governments can kill it or will want to kill it. And the reality is that was probably true or could have been true maybe 5 years ago, but we're just past that point. And actually, we've been past that point for a couple of years at least. I just don't think people have realized it yet. There's no way Bitcoin's going to get banned or regulated out of existence in America. It's just not going to happen. You got too many people like you and me, millions of Americans who already own Bitcoin, and not only already own Bitcoin, but are passionate about it. They see a huge societal benefit to the success of Bitcoin, in addition, obviously, to the potential upside in terms of the investment. And they're not just going to roll over if Congress or some arm of the government decides that it really wants to make life painful for Bitcoin. And what's interesting about the recent regulation is, yes, there's been a quote unquote crackdown, by the SEC specifically. But most of that really has been directed against digital assets that appear to be securities. And Bitcoin is one of very few digital assets that are unambiguously not securities. And so as we look at the investment landscape in Bitcoin or other digital assets, and as advisors ask themselves, okay, how do I get exposure to this wild and woolly world? Bitcoin looks safer on a relative basis than ever compared to other digital assets out there. And I think this really plays into the thesis for Bitcoin.
Yeah, and I think this idea that the government is going to ban it, another way that I look at that is that every day that goes by, there's more people in government, and I'm talking specifically here in the US, there's more people in the US government who are becoming advocates for Bitcoin. We just had Yang come out here the other day and say that he's moving from a Democrat to become an independent. And he's like, I think Bitcoin is wonderful. And he thinks it's a great thing. So, and we've got Senator Lummis in Wyoming, who is a big proponent and just came out, and she owns like 6 figures worth of Bitcoin. So I think we're getting more and more people in the US government that are becoming advocates of it. So I think the risk that the government is going to ban this thing is really small right now. But with that said, let me take the opposite side. And some people will say, well, the government can shut down the on-ramps to Bitcoin. They can tell the banks that you can't move money from US Bank to Coinbase or back and forth. So yeah, maybe you can own Bitcoin, but you don't have any way to convert your Bitcoin to US dollars. What are your thoughts on that?
Yeah, I think it's interesting to think about, a quote unquote ban or an attack on Bitcoin, what form that would take and what that looks like. And so you just identified what is arguably one of the most vulnerable avenues for attack. So I agree with you. It's like, okay, if the government were to attack Bitcoin, the US government, how would they do it? Yeah, maybe severely hampering the on-ramps would be an obvious way to do it. That said, I don't view that as particularly different than a direct attack on Bitcoin. I mean, you and I and anyone listening to that know that is, that's tantamount to saying, hey, Bitcoin can't operate effectively in the US. So I don't know. I think that's a very low probability outcome that the on-ramps, the exchanges get shut down or severely hampered, not least because you got Coinbase, which is now a publicly traded company. That was a big industry de-risking event. Likewise, you had MicroStrategy buying a bunch of Bitcoin for their balance sheet. Now, MicroStrategy does not have the same market cap as Coinbase, but these are multi-billion to multi-$10 billion market cap companies. And so attacks on the industry, attacks on the on-ramps really would adversely affect the capitalization in this industry. And if the publicly traded Bitcoin related companies already are tens of billions to hundreds of billions of market cap, if you include companies like Square, like PayPal, like Robinhood that have active businesses in Bitcoin and crypto, and then you include all the private companies that haven't come public yet, there is hundreds of billions of dollars probably in excess of $1 trillion of company enterprise value that has already been built up and been capitalized. And that is capital that is owned by American citizens. I mean, it's not only American citizens, but it's voters and taxpayers. And so a direct attack on this pot of value just seems extremely low probability to me. Although I do agree with you that if they were going to decide on how to do it, probably targeting the on-ramps could be one of the most effective ways.
So let's say I'm going to continue to play the devil's advocate here because I want to make sure we're getting out both sides because, again, a lot of people here listening to this are probably skeptical. So what if the government says, we're not going to ban it, but we're going to compete against it? We're going to have the US dollar coin or whatever, or, the government is going to come out with its version that it thinks, hey, we think we're the incumbent here. We've got the military behind us. We're going to come out with our coin and it will automatically be able to be used within the existing infrastructure and the financial piping that we have around the world, the SWIFT banking system, so on and so forth. Is that a possibility that the government could get wise or smart and come up with something that could effectively compete against Bitcoin and some of these other digital assets?
Yeah. So could they and will they launch something that they see as competition to Bitcoin? Yes. I fully expect that to happen at some point. It might take years. It's likely to take years just because of concerns for how that could partially disintermediate the banking system. But eventually I expect it to happen. So the question is, so what? Is FedCoin, let's say, competition for Bitcoin? And the answer is not even a little bit, unless they make some major changes. And the reason it's not even a little bit is because of the monetary policy. Bitcoin's value is not currently for transactional purposes. If Bitcoin reaches its potential, let's say a decade from now, right? It's already been over a decade, but I think probably it takes another decade for this to happen. If it reaches its potential such that most people on Earth own some Bitcoin, and the value is therefore much, much higher, like an order of magnitude or two higher than it is today, then yes, the price will be more stable. People will transact with it. In the meantime, it is a hard money asset like gold. So does a new electronically cleared dollar system compete with hard money? I don't see how it competes with hard money. It's still got the same monetary policy that the dollar does. And as we know, they're printing dollars faster and faster at an accelerating rate. Now, if you said, oh, they're going to launch this new money and they're going to get some fiscal rectitude and some monetary rectitude, like we're going to start balancing budgets and we're going to stop printing money, and the Fed, as the controller of this new Fed coin, is going to restrict the supply. Now, that's a different story. That actually could potentially compete with something like Bitcoin, except for the problem with that, even if it happens for a while, is that what you know and what I know and what people who read monetary and financial history know is that even governments that attempt to have some discipline with respect to spending and printing money, it doesn't last. So if you come to me and you say, hey, the Fed comes or Congress comes and they say, hey, we're launching this thing and it's fixed supply and it's going to have a tight monetary policy. Will the price of Bitcoin go down for some period of time? Probably. Will I sell my Bitcoin? Definitely not, because I know that the government's going to backtrack. I know we'll just be one more election cycle away from the reversal of that hard money policy or that hard fiscal policy. So yeah, it seems like it would be competition for Bitcoin, but in reality, I don't think it is.
So this might be a nice segue to talk a little bit about modern monetary theory. And I had the opportunity to spend an hour with Professor Stephanie Kelton earlier this year for a podcast, and we dug right into that. And of course, she's one of the most articulate proponents of modern monetary theory. She also wrote a book called The Deficit Myth, which I encourage everybody to read. even if you're not a fan of MMT, I think it's important that you understand what's going on, because it's clear that our government seems to operate under an MMT framework. But we'll see, we'll see over time. And so, I mean, let's talk about how should we be thinking about MMT right now? And I know, basically what the philosophy says is that the government has the ability, at least in the US, because we're a reserve currency, we create our own currency. So we've got the ability to basically create as much money as we want, with the main constraint being inflation. And as long as inflation is under control, and as long as the money that the government is creating and putting out into the economy, because every dollar that the government creates is income to someone else, and as long as that money is being invested wisely and we're getting a positive return on that money, things should be good, again, with inflation being the constraint. What's wrong with that idea?
Yeah. So first, I'll make the caveat that although I've heard Stephanie Kelton on podcasts, and I haven't heard her on yours, but now I'm going to go back and check out that episode. Although I've heard her speak, I've not read her book, but I should do that, and I intend to. Now, what I would say is the other piece I'd add to that, and you correct me if my understanding is wrong, is that my perception is that even if the inflation starts to get out of control on the monetary side, it's okay because the government can tax it and tax the populace and therefore sterilize the inflation, because taxation on net is deflationary, right? Because it takes away from demand. And I think that is an appealing idea that completely ignores the reality of politics. And if you want to, have any doubts about whether the government can just increase taxes at will to counter inflationary effects from printing money, just look at the current, the ongoing debate right now, which is we had a Democratic sweep in Congress. Okay, just barely, but there is a Democratic majority in Congress, and they're trying to get a spending bill done, and it's turning out to be harder than they anticipated. And by the way, I say a spending bill, but really it's spending in tax. So yeah, I think that politics are harder than, academic whiteboards. It's harder to implement this stuff than it sounds like, in theory. That's one. And then number two is, in order, I think, to sterilize the monetary policy with fiscal policy, you may have to stop running deficits. You may have to run some surpluses. In other words, you may not only have to increase taxes, but you might have to adjust spending downward to balance budgets, or at least at the margin get closer to a balanced budget. And so again, I look to history and I say, show me some evidence that that's possible in the political environment that we find ourselves in. The budget deficits, but the U.S. government budget has been in deficit for as long as I can remember. I mean, I guess there were a couple of years back in the 90s under Clinton, when we had transitory surpluses that didn't last very long. And moreover, the deficits have been just increasing with time. So yeah, I say, convince me, show me some evidence that this idea, which sounds good on paper, is actually executable, implementable within the political realm in which we live.
Yeah, I think that is the difficult part, is the political part, that if you were operating under an MMT framework again, and I think to some extent our government is, because I remember back in the 80s when Reagan was president, and the big thing was the deficits. We had, I don't know, $80 billion, $100 billion deficits back then, and we thought the world was going to end, and it didn't end. And
remember
here
when
we are,
tens of billions of dollars was a big deficit?
That was a big deficit. Yeah. We thought that was like the worst thing in the world. And people were getting elected to office because they were going to balance the budget. And it's like, no. So we've been talking about this for 40, 50 years. And what are we at? 26 trillion is our, our cumulative deficit or whatever. I mean, it's a big number. And, but yeah, the political issue, that's the hard part, because at what point does Congress come together and say, yeah, even the Republicans are like, yeah, we're going to raise taxes? That's hard to see. But let me talk about this too, because I think this all ties into Bitcoin and the whole hard money thing. Is we were on a gold standard for a long time, in and out of a gold standard a number of times over the centuries, and we severed the last link in 1971, and that was really the beginning of the whole fiat era here. And so some people would argue that if you are on a hard money standard or a fixed standard, that how is the economy going to grow if we can't expand the base of money that's circulating? And maybe you have some thoughts on that, or maybe it can expand 2% per year. Maybe there's a two. If gold is if we're mining 2% more gold per year, that's the flow on the stock to flow. Is that enough?
Yeah, I think this is a common fallacy in monetary economics. And I was taught exactly what you said. That's what they said in the college textbook in economics. And the reality is, as long as it's divisible enough, the same amount of money can service an economy that's this size as is this size, right? If the size of the economy doubles, as long as you can split those units of money small enough so that you can transact, then yeah, the purchasing power of your money, all else equal, goes up over time. And does that sound like a bad thing? To me, it sounds like a good thing.
So are we going to be in a deflationary environment? Because I mean, there's another, Jeff Booth's book has been very popular here. And I think one of the premises of his book is that we've got these two forces that are working against each other. So one force is technology, and as technology continues to improve over time, that's a massive deflationary force on the economy, because we can get more power because of computer processing and so on, that we can get more output for the same amount of input. So at one point, it's like, gosh, prices should be going down. But then on the other end, we've got the government that keeps putting more and more and more money into the economy, which is causing it to inflate. And so these two forces are sort of competing against each other. Is that another way to be thinking about that? And what might be the ultimate outcome of that?
Yeah, absolutely. I think that's exactly right. I'm a big fan of Jeff's book. He frames it really well. And it's exactly as you stated. The natural state for the economy is deflation. Why? Because technology brings us goods and services better, faster, and crucially, cheaper, right? The cost of most things that we consume, and there are some exceptions, but most consumer goods comes down over time. That is what technological productivity advancement is all about. It's about making stuff cheaper. So in a vacuum, so to speak, or in natural state, we should see the price of goods and services on average go down over time as technology advances. And what you stated is, yeah, but in their wisdom, economists that drive government policy had decided that it's a good idea to inflate the supply and counteract that deflation on average over time. Now, Booth's perspective is not only is technology bringing prices of goods and services down over time, but it's doing so at an accelerating rate. And the problem with that is you have to accelerate the money printing, to offset that and get yourself to a net positive inflation target of 2%. And his argument, and I think it's pretty persuasive, is that's ultimately going to be impossible. You're going to have to print so much money that you're going to blow the axles off of the financial system. We're kind of seeing it happen as we speak. One interesting way to look at this, and I think this is underappreciated, is I suspect that many people in government, including the central bankers, see this problem and they don't know what to do about it. They're sort of stuck on this treadmill. But as Bitcoin grows, more and more of them are going to realize that there may be an opportunity for a peaceful transition to a harder money standard rather than an inflationary blow up of the economy, which is potentially what we're facing in the long run if we don't fix the system. And Bitcoin offers, like I said, the opportunity perhaps to be adopted over time and make a transition to a hard money that is more congruent with an economy where technological deflation is the driving force.
Okay, so I'm probably going to take this conversation off the rails here.
Go for it.
All right. So the first part is not going to go off the rails, but you made a comment and you said that like the natural course is deflation. Okay. So, but from a psychology standpoint, as humans, it's like, I don't want my income to go down by 2% per year or some number. How should we, is that what you're thinking? Is that if we didn't have the inflationary pressure of all this extra money, prices are going down, let's say 2 or 3% per year. Does that mean my income's going to go down 2 or 3% per year?
Yeah. So look, it's possible that some people's incomes will go down in nominal terms. I think, though, that would be a relatively small subset of the economy because remember, productivity gains ultimately do accrue to people. I mean, your cost of the way I look at it is technological advancement allows goods and services to be produced more cheaply. And so holding wages constant, that's a system that maintains equilibrium. I guess I would agree that it'll be less likely that you just see increases in wages over
like
time.
2% annual wage increases for inflation.
Exactly. You're not going to see workers getting a raise as a matter of course, just to keep up with inflation. Your baseline would be sort of zero. I don't want to say zero wage growth, but let's say closer to zero wage growth rather than ongoing increased wage growth. That's how I see it.
Yeah. So here's where I might take it off the rails. So if we think about technology and it continues to accelerate at an increasing rate, and then we think about the metaverse and how, and I talked about this at the Bitcoin for Advisors conference where I said, we're in this digital era. I mean, that's not a brilliant insight. I mean, we've been in this era for decades now, and we've moved from the physical to the digital. And as that continues to accelerate, and we spend more and more of our time in the metaverse. And I'm not even going to try and give a definition of what the metaverse is because I've been trying to figure out exactly how to define that. And I'm not sure that anybody can really define it. But anyway, the bottom line is we're going to spend more and more of our time in a digital environment. And the things that were physical or tangible have now been dematerialized. And so as we think about is the ultimate movement of technology that everything is just digital, it's virtual. And so we don't have these physical goods. And so the need to continue to print trillions and trillions of dollars is lessened because we're not creating physical goods like we used to when we were in a physical, tangible economy. Any thoughts on that?
Yeah, I agree with that. When you go back, you can go back decades already and see the first inklings of this, right? So you had things like Wikipedia, right? And all these people across the planet contributing to this repository of information and it becoming better than the encyclopedias out there. And how did that show up in economic activity, right? In GDP? And the answer was it didn't. So there's already, everything that becomes dematerialized, as you said, that moves from a physical instantiation, whether it's, I used to have a boom box or a tape recorder or whatever, and now I've got
and now it's all in my phone.
It's all on the phone, the calculator, the music.
Flashlight.
Exactly. The flashlight.
GPS, map.
It's all there. And so, yeah, I do think that is going to continue. The latest manifestation of this may be what we're doing right now. My best friend is a pilot. And so for his sake, I hope that flight, the airline industry recovers to its former glory. But I'm skeptical that we're going to be doing as much business travel as we were before because the experience over the internet here has actually gotten pretty good. And so, yeah, I think it's ongoing. I do agree with the metaverse take, whether or not we can describe it or define it explicitly or precisely. I think that's the way things are going. And that'll be, again, it's taking cost out of the economy, and that, a significant portion of that does accrue to the individual, to the average person, whether it's you or me or anybody else listening to this podcast.
All right, well, let's switch gears here. And you and I, as we were preparing for our conversation here today, you turned me on to a tweet that you did a while ago and brought it up, and I think it's really relevant right now. And that is comparing the risks of Bitcoin to, say, the risks of Facebook, Google, Amazon, and Apple. And another way that I want to frame this is a lot of financial advisors will say, why would I want to invest in Bitcoin when I've got stocks? And stocks have shown for hundreds of years that they have earnings, they grow like the economy grows. A lot of them are going to pay dividends. We've got a long history. So why would I even want to waste my time with something like Bitcoin? And I think you've got a bit of a take here in terms of Bitcoin vis-a-vis some of these other stocks out there.
Yeah. So I definitely did have, I would say, what was a non-consensus view a year ago that maybe is becoming a little more consensus today. And the tweet you're referring to is something along the lines of, and this was almost exactly a year ago in October of 2020, something along the lines of, at this point, the regulatory risk to Bitcoin is lower than the regulatory risk to those giant internet companies that you just listed: Facebook, Amazon, Google, Apple, et cetera. And we're seeing that come to fruition. I mentioned some regulatory actions by the SEC under Gensler against other digital assets, but they really haven't been attacks, let's say, on Bitcoin. Obviously, we've seen more frequent and louder criticisms and discussions in Congress, especially about Facebook, but it's not just Facebook. It's also Google, it's also Amazon. It's also not only in the United States, but it's even more so in Europe. Europe has taken a harder line against the internet giants for years now, and it just seems to be accumulating and accruing over time. So when I look at the regulatory risks to the investment, I say, people's perception is that there's huge risk of government attack against Bitcoin, but really that's way overblown. And clearly the government attacks are coming and ongoing and increasing against the internet giants. Oh, and by the way, those internet giants already have capitalizations, in some cases, in the multiple trillions of dollars. Bitcoin's only worth $1 trillion. They're valued at $1 trillion today. And then finally, when you think about the investment potential, you have to ask yourself, what is the investment potential of a stock that is exposed to cloud services? And that's true for especially Amazon, but also Microsoft and Google. Well, that's a big potential market. Is it trillions of dollars? Yeah. Could it be tens of trillions of dollars? Possibly over time. Now ask yourself, what's the market potential in a world where they're printing money at an eye-watering rate? What's the market potential for hard money? Well, it's at least gold, right? At minimum, it's that $10 trillion of gold, but it's also other use cases. It's going to be eating into fiat, probably into the dollar over time. And by the way, I'm not that worried about the dollar anytime soon. It's the weaker foreign currencies that are going to come under more pressure as a result of Bitcoin adoption way before the dollar does, especially because there's so much dollar denominated debt, right? So much of the world is effectively short dollars that there's going to be a bid for dollars for a good long time here, many years. But yeah, when you think about the market potential, the total addressable market, let's say the TAM for Bitcoin, it's at least gold, fiat money, offshore assets. Ultimately, it's partial demonetization of other major asset classes. A lot of people hold real estate, which is a multi-$100 billion asset class. A lot of people hold real estate as an inflation hedge because it's limited supply. But real estate has certain drawbacks, like it's physically in one location. So you can't cross a border with it, or you can't move your capital out of it quickly. Bitcoin offers you a system in which you have a limited supply asset. It's extremely liquid. Not only does it trade billions of dollars worth per day, but it trades on nights and weekends. And so there's going to be a certain portion of the real estate market and the stock market that gets partially demonetized as Bitcoin gets adopted. So the total addressable market for Bitcoin is enormous. It's tens of trillions of dollars. It may even be in excess of $100 trillion. And compared to the total addressable markets for the internet giants, those companies that we know and love and hate, yeah, those are big market opportunities, but I don't see them as being as big as the market opportunity for Bitcoin.
Well, we may have to have a part 2 to this if you're up for it, because I've got a lot of things that I still want to talk to you about. And I've got a couple here that I want to try and sneak in here. And so one, just to kind of close the loop here on these FANG stocks is, I mentioned we're in the digital area. Again, not a brilliant insight, but we're also making a shift from centralization to decentralization. And of course, Bitcoin is leading the charge there. But I think it's also possible that if you look at these big tech companies that are very centralized, that we're starting to see the recreation of those companies in a decentralized form through blockchain technology. So I think that's something that we need to keep an eye on as well. And that may be, the death of some of these companies. Again, not that that's going to happen anytime soon, but we've seen some companies that have tried to recreate those big tech firms using blockchain technology. I'm not sure that any of them have been hugely successful yet, but we'll see if that shift happens as well. I don't know if you got any thoughts on that or.
Yeah. And I think, we have to stay tuned for that to play out. I agree with you, Steve. And this gets also back to the concept of which countries will be safe for Bitcoin. And there is no doubt that one of the things that Congress got right in the United States decades ago was letting the internet flourish, right? There was serious discussion decades ago about treating anyone who runs a website as a broadcaster and therefore requiring them to have a broadcast license, right, with the FCC. Crazy. It sounds crazy, but they almost did it. And fortunately, they didn't. So fortunately, the internet was not overregulated in the United States. And as a result, almost all of the world's most valuable companies today are American. It didn't have to happen that way. It could have happened in Europe. It happened to some degree in China. A couple of the internet giants are located there, although that's sort of in retreat at the moment. We'll see how that plays out. But fortunately, the United States has been, and I think still will be, a relatively safe place for capitalism and for entrepreneurship, because the powers that be do understand that people become wealthier, lives are made better overall and in the long run when you let innovation flourish. So I don't think that the powers that govern us are going to quash Bitcoin or digital assets, because there's a real possibility that the internet in some areas could be re-architected as you describe, such that we don't have these monopolist single companies that, by the way, in a lot of cases are controlled by one or two people, right? Dual share classes. Zuckerberg basically does what he wants. Likewise, Bezos effectively at Amazon, although he's stepping back. Likewise, the Google guys. Anyway, so there's a hope that, yes, some of the functions of these big monopolist internet companies will be reinstantiated, rebuilt in decentralized form. I think it's going to happen. I think it's going to take a really long time, number one. Number two, I have no confidence about, on what platform or, on what blockchain that's going to happen, which for me makes it very hard to invest in. And yeah, number three, I do think that centralized companies will be better at doing certain things, certain functions. They will still be best at. So it's not like they're all going to go away, as you say. I mean, what you're saying is correct. I believe that they're not going to go away, especially not anytime soon. But yeah, I am hopeful that at some time in the future, I will control my personal data. Number one, I will choose who to reveal those data to. If I choose to reveal them, I will be compensated for it. And I hope to claw back a little bit of the privacy that's gone away as a result of the domination of these big companies over time. So I'm hopeful that will happen.
All right. So we have not even touched on the investment case for Bitcoin, and that obviously is your specialty. I think your firm is managing how much money?
Yeah. So my wealth management firm manages roughly 850 million in assets, and I personally manage about 300 million in client assets for roughly, call it 75 clients.
Okay. And I know you're allocating to Bitcoin. I think you're actually allocating to gold as well. And so that's a whole nother conversation. Like I said, hopefully we'll have a part 2 to talk about that, because that's a area that we definitely need to discuss. But as we wrap up here, I guess 3 things I want to wrap up with. One is I've got 2 questions that I want to ask you, where I'm going to ask you to put your forecasting hat on and look out over the next 10 years. And then the third thing I want you to talk about too is Swan Bitcoin. So I know you do some work with them. You've invested in them, and talk about what you're doing there as it relates to financial advisors. So let's start with the 2 things I'm going to ask you to think about 10 years in the future. So in your book, you said that you came up with a rough probability distribution of the outcomes for Bitcoin. Now, I think your book came out in 2019. So here we are in 2021. I'm going to guess that you've updated this, but you said your 3 potential outcomes over the next decade for Bitcoin. You said that it's about a 1/3 probability that it fails and goes to zero, a 1/3 probability that it becomes a very niche asset and therefore doesn't gain significant traction from its current level, and then a 1/3 probability of success, approximated by a 53x outcome. So here we are today. How would you update these, or would you have different outcomes? Or if you stick with these 3, what probability do you give to those 3 outcomes?
Yeah, that's a great question, Steve. So I would amend it. And why would I amend it? Well, the first reason is obviously we've already traveled part of the distance, right? When I published the book, I think the price I used in the book was about 8,500 per Bitcoin. Today we're sitting close to 55,000. So we're closer to the goal. That's one piece. The second piece is, yeah, I published the book before the pandemic. So as we know, the pandemic did a couple things that are relevant to Bitcoin. The first is they printed a heck of a lot more money. And so the more money that gets printed, the more clear it becomes that we need a hard money asset. That's one reason. And then the second reason, of course, as you know, is that the pandemic really accelerated, it seems, the digitalization of many things, or everything. I mean, we hadn't always been on Zoom doing podcasts and meetings. Now we are. And frankly, I think we're just that many steps closer to living in the metaverse, as you put it. And so that's been accelerated. So we're closer to the goal. That's one. The second thing is, I like the framing of Ross Stevens over at NYDIG. He says when he thinks about the probability distribution of potential outcomes, that left tail, the zero outcome, has basically been cut off. We're pretty much past any risk, any significant risk, let's say, that Bitcoin goes to zero. So can any asset go to zero? Yes, technically it can. Do I still assign a 1/3 probability that it goes to zero? No. My probability that it goes to zero is, I don't know, single digit, percentage, probably low single digit percentage. The last thing I'll say is, to be honest with you, Steve, I took a slightly conservative view in the book relative to how I saw the world. In other words, I thought about the investment thesis as I see it and the price target as I see it, probability weighted, and then I dialed it down a little bit.
You didn't want to scare people too much.
Exactly. If I had used
it's like, what is this guy smoking out there in California?
Amen. If I had used the number that I really believed, I'm pretty sure that a larger portion of readers would have just dismissed it out of hand. Yeah. It doesn't look so crazy from the prices that we're at currently, but from the prices that we were at 2 years ago, my target would have looked a little nuts. Let's be honest.
All right. Okay. So then the second 10-year outlook that I want you to think about here is, let's say that it's 2031. And I want you to talk to me about the relative position of the US dollar, Bitcoin, and then maybe the competitiveness of the US and China. So we're the big behemoths right now, and we've got the dollar and Bitcoin. How do you see those playing out and evolving over the next 10 years?
Yeah, that's a huge question. So prior to the pandemic, if you'd asked me what's going to happen to the fiat monetary system overall this decade, because that's really what you're saying is in the 2020s or 2020s plus one, I would have said, I don't know if it's going to come to a head this decade, so to speak. I don't know if we're going to get resolution on fiat money. Now, post-pandemic, I think it's a lot more likely that much more of the world is using digitally native cryptocurrency. And I think that digitally native cryptocurrency is going to be Bitcoin. Now, I said earlier that I'm not worried about the dollar going away very soon, in part because of the quantity of the liabilities out there, that there will be a bid for dollars. So how does that, how does the dollar fit in? My personal base case for inflation and money printing this decade is they're going to keep printing money fast, and inflation, I'm talking about consumer price inflation, is likely to be higher than it was in the past. I'm not talking about hyperinflation. I'm just saying, like, could we have mid-single digit or even consistently mid to high single digit inflation for a number of years as a potential partial solution to the debt problem? There's way too much debt. Yeah, that seems like the easiest path to me. So yeah, I see the purchasing power of the dollar losing at a faster rate than it has in the past, but again, not sort of going away. I see Bitcoin obviously as accruing much more value, eating the market cap, so to speak, of gold, or eating into the market cap of gold first, as well as taking some share from fiat money, especially in foreign countries, as well as taking some share from the offshore asset market. To your question about what's going to happen with China, I wish I knew the answer. That's one of the hardest questions for not just investors, not just financial advisors, but humans on planet Earth, especially if you happen to live in either United States or China. And I live in the United States, as do you. I wish I knew how that was going to resolve. I think that I do fear conflict. I do fear a problem with Taiwan. I do fear, let's say, ongoing technological competition, economic competition, trade wars, inflaming of the populace, and pointing ire against the other, in the case of America versus China, and China versus America. I'm somewhat heartened by a historical fact, which I need to check, but I just heard a pretty good interview with Marco, is it Popich? Yes, Marco Popich, formerly of BCA, now at Clock Tower. And what he pointed out, which I'd like to fact check, is through a longer historical context, US-Russia Cold War was somewhat of an anomaly in the sense that the Russian bloc really didn't trade with the American bloc. Usually through history, it's better business. Even if you have a competition, it's better business to still trade with your competitor, because if you don't, other countries in the world will, and you'll lose, relative competitive position. So part of me says that we can still trade some with China relatively peacefully, not maybe in those crucial or critical areas like semiconductors or like, crucial healthcare product inputs, but maybe in other areas. So I have some hope that it's not going to come to a hot war with China. But yeah, I wish I could tell you what it's going to look like in a decade. I do think China will launch will roll out more fully their digital currency. I think it'll get some adoption among economies where China is active, companies or countries, excuse me, in parts of Africa and Asia, where the Belt and Road is already ongoing and where they've got economic ties that are significant. But I don't know if you're going to pin me down on what's the outcome of U.S. versus China. We'll just have to see.
We will have to see. And it's really going to be fascinating in terms of you've got the U.S. economic system, which is more democratic and more leaning toward freedom. And then obviously you've got the opposite there in China, and particularly with Xi there, who really essentially wants to be in power for life and has much more control over their folks. And they've gotten rid of Bitcoin and they're trying to create their own internal closed environment. And historically, closed systems don't work very well, but it'll be fascinating to see if China is big enough and they've got the ability to do that, even though their population, much of their population has gotten a taste of what the Western world is like. And so it's not like they don't know what's on the outside. They know what's out there. So anyway, so that'll be fascinating to see.
I want to interject. Sorry, before
sure.
We get to the last question, Steve, I want to interject one comment on what you just said, which is, yes, is going to be fascinating. Yes, you said that China has sort of, quote, gotten rid of Bitcoin. I want to push back on that because I agree with the facts that you just laid out, which is the government's getting more oppressive, more intrusive in China. And I just put the question to your listeners, which is, do you think the average Chinese person who has some assets now has a greater or a less incentive to own Bitcoin as a result of the ever encroaching government? And my answer is Chinese citizens have more incentive than ever to own Bitcoin, because Bitcoin, if you secure it properly, if you hold your own keys, is the one asset that they literally have to beat out of you, right? And so I think that despite the fact that most, maybe not all, of the mining capacity has been pushed out of China for the moment, I think that Chinese citizens are going to be more incentivized and eager than ever to get their hands on some Bitcoin. And I don't see that changing anytime soon.
Yep. All right. So let's talk about Swan. So tell me, what is your relationship with Swan and what are they trying to do here as it relates to financial advisors?
Yeah. So speaking of people getting their hands on Bitcoin, that's the mission of Swan. Swan, founded by Corey Clipston and Jan Pritzker a couple years ago, basically is in the business of getting Bitcoin into people's hands. And my relationship is I recently joined the board, and I've been an advisor to the company for a while now. And what we're doing is, although we've had a retail and high net worth service for accumulating Bitcoin, basically just buying Bitcoin either in single purchases or in dollar cost averaging format, we're rolling out a product for financial advisors. And we're not the only financial advisor product, but I would say where we stand out is two parameters. One is we are focused on education. And I think a lot of companies claim they're focused on education. I think we really do have the best educational team in the business. We have at least two people that I can think of that have published books on Bitcoin. That's me and Jan. There may be others that I don't remember, but we also have a big team of Bitcoin educators, podcasters, article writers, people that have put tons of Bitcoin content into the hands of the public. And now we're directing that content at financial advisors. And the second area where we're differentiated is we're Bitcoin focused. We really do believe that Bitcoin is the one investable and crucial to own asset class within digital assets. And we really think it's important that financial advisors get focused on it for the benefit of their clients and their practices. And so, yeah, we're rolling out a service, Swan Advisor Services, which is all about getting your clients access to Bitcoin, making sure that you as the advisor can monitor it. That way you can think about your Bitcoin allocation for your clients in the context of their overall portfolios. And then, of course, also monitor it so that you can charge management fees as appropriate as a financial advisor. So that's what I've got going on with Swan.
Okay. So I can vouch for your book, which is Why Buy Bitcoin. I can vouch for Jan's book, which is Inventing Bitcoin, because I read that one. Actually, I read that one before I read yours, and that's a great book as well. So I encourage folks to get a copy of that. I think you can go to the Swan website and get a copy of Jan's book, download it. Is that even free? Maybe if
You
you.
sure can. Yep. You
Okay.
can get Jan's book for free on the website. And maybe they'll convince me to offer mine for free at one point, but I haven't got there yet.
Yeah, well, just have them pay you, some amount in sats, of course, for each book, and then they can give them away for free. So tell me a little bit more about how you're going to make this connection with advisors. So I know we've got Geminis out there, and they're making some of the plumbing between Gemini and some of these SMAs out there, and OnRamp and some of the different firms. So what is Swan going to be doing that may be the same or may be different from some of the other firms out there?
Yeah. So you identified Gemini, and Gemini is one of the major exchanges, access providers to Bitcoin that is regulated in the US. And basically, Gemini, therefore, is a supplier of Bitcoin to some of the other platforms, let's say, that serve financial advisors. So we're now a platform that serves financial advisors, or we're about to be. And we don't happen to use Gemini. We use Prime Trust. Prime Trust is another qualified custodian in the US. I would say substantively, there are a lot of similarities there. There's a handful, maybe it's a dozen qualified custodians that not only have the right licenses and qualifications, basically to handle Bitcoin in the United States for third-party providers like us, but also have been doing it for a number of years securely, basically without getting hacked or stolen from, right? So yeah, Gemini is a provider to, I think, several other platforms that serve advisors. We're partnered with Prime Trust, which I would say is largely, comparable. They have we have access to over-the-counter desks and exchanges to source coins, and Prime Trust is custodian by default. That actually is one interesting, I would say, differentiator for Swan, which is for our retail product, we actually encourage customers to get their Bitcoins, out of Prime Trust, or said differently, off the exchange or the custodian and into their own cold storage and custody. And that's something we want to encourage advisors to do, or their clients to do, if they want to. Now, the reality is most advisors and most clients who haven't already gone and bought their own Bitcoin, they're going to be more than happy for their advisor to monitor it within their existing software that they use for monitoring and billing, et cetera, and just hold it at the custodian. That's the easiest. We think it's very safe. That's a pretty good default. However, for advisors who have clients that are coming to them that are saying, hey, I want to hold this stuff myself, or I want to hold the keys, or I want to hold some, and I want my advisor or their custodian to hold some, we're more than happy to educate advisors on how they can accomplish that goal for whatever subset of their clients are interested in that solution.
Yeah. Well, what is the best way for folks to learn more about that then, if they're interested?
Yeah. swanbitcoin.com/advisor. Check out that URL, and we'll push information to you about the product and get you in touch with our team.
Yeah. And check out the podcast too, because like you said, you guys put out some great information. The podcast is fantastic. I know at the Bitcoin conference in Miami earlier this year, the Swan tent was like one of the hot spots there, and a lot of people were hanging out there and recording all kinds of shows. And so that was definitely the place to be and be seen in Miami during Bitcoin 2021.
Absolutely. And I unfortunately had to miss it for personal reasons, but I'm glad you were there, Steve, soaking in all the Bitcoin knowledge and activity. And I know there were a lot of advisors there, and I hope to see even more of them at the next one.
Yeah. All right. So anything else? I know we've got a long time here. Anything else that you want to mention here that we haven't talked about yet?
Steve, we talked about a lot. If people want to get more of my thoughts, I'm on Twitter. The handle's Edstrom Andrew. And yeah, I do encourage people to think about Swan. Before you think about Swan, though, just think about Bitcoin for your clients and for yourselves. And it's just a fascinating area to discover and learn about. And I think it's going to be more and more impactful to not only the financial world, but the world overall. So I thank you for this conversation. I had a great time. If you want to do a follow-up discussion, I'm more than happy to do it. And I hope people, if they aren't already, check out some of your other content. I just started delving into specifically the discussions, the interviews you've been doing, the pods on Bitcoin, and I really like what I'm seeing.
Great. Well, I appreciate that. So yeah, this has been great, Andy. And thanks for taking the time, and congratulations on the book and all the great work that you're doing.
Thank you, Steve.